Hello, today we are going to solve Jan 2025 paper question number 2. KC prepared a trial balance, the totals of which agreed. He then proceeded to prepare his annual financial statements on 31st December 2024, which showed a profit for the year of 4,640. Okay, so it has been written here, draft profit for the year. Calculate the correct profit for the year ended 31st December. So if there is no effect on the profit as a result of an error, state no effect. So on inspection of the books, KC found that some errors existed. So we are supposed to correct those errors and calculate the corrected profit. Purchase returns of 10 items at 350 each had been recorded. Okay, so the purchase return is going to increase the profit. Okay, purchase returns increases profit by 350 pounds. So 350 pounds. So how is the profit and purchase returns are related? We know that profit is equal to, okay, profit is equal to opening inventory plus purchases minus closing inventory. And here if there is returns, that is minus purchase returns. So purchase returns minus closing inventory. So if the purchase return increases, okay, the purchase return increases, it indicates. So if the purchase returns had not been recorded, and if it is included, okay, this is going to result in profit, increase in profit. Now, so that is opening inventory. Okay. Next we have closing inventory count on 31st December 2024 included 15 items of 36 pounds each. This had been totaled to 54 pounds. So the value of this, okay, we will calculate. So 15 times 36 is equal to that is equal to 540 pounds. So this value had been totaled to 54. So we have to include this. Okay, 540 minus 54 we have to include, because that had been just written as 54. So 540 minus 54, that is equal to 486. So 486 pounds has to be included as a closing inventory. So when you include, this is also going to result in the profit being increased. Then commission receivable on 500 items at the rate of 3 per item had been recorded in the accounts as a total of 3000. So we can see that 500 into 3, that is 1500, okay, pounds had been recorded as 3000. So the difference has to be accounted. So 3000 minus 1500, okay, 3000 minus 500 times 3, that will be equal to 1500 pounds. So this has to be recorded. Now commission receivable will act as an income. Okay, so when we see where is commission receivable, it is profit, okay, is equal to, it acts as an income. So commission receivable, okay, has to be it had been recorded as 3000. The income was high, so we have to reduce this income, which means profit will get reduced by 1500. Then we have the rent and general expenses. Rent payable were at 250 was prepaid and general expenses 425 was accrued, and no adjustments had been made for this prepayment and accrual. So we know that profit is affected by expenses also. Profit is equal to income minus expenses. Now this one, okay, the rent payable we have to adjust. So the rent payable is going to become, it was prepaid, so we have to subtract 250, and general expenses 425 was accrued, we have to add 425, so to the expenses. So there is a decrease in expense, okay, there is a decrease in expense, which means increase in profit. So this is 250, okay, will increase, and an increase in expense of 425 is going to decrease the profit by same amount, so 425. Then EDA receipt, okay, EDA receipt, so the check received 300 from EDA, a trade receivable had been posted to the account of ISEC. So this will have no effect because they are from the same class, so this is going to result in no effect, okay, on the profit. Trade receivables doesn't appear in the profit statement. An irrecoverable debt of 600 was written off in 2023. The receipt of zero point 0.4 in the £1 was received as a final settlement on that debt in December 2024. No entries had been made in the books to record this receipt. So 600, okay, 600 times 0.4, that is equal to 600 minus 0.4, 600 times 600 times 0.4, that is equal to 240 pounds. So 240 pounds was received, okay, the towards the irrecoverable debt. So this is going to reduce my expense, and so it is going to increase my profit, okay. So 240 pounds. Then allowance for irrecoverable debt balance of 1000 on 1st Jan 2024 had not been adjusted. It was required 4% of 35,000 of trade receivables. So let's calculate this. 4% of 35,000, that is equal to 0.4 times 0.04 times 35,000, that is equal to 1400, okay. So that is equal to 1400, and the allowance for, so the balance was 1000, okay. So we have to find the difference in this. So balance at the beginning was 1000. Now the trade receivables has increased, so which means that expense of this allowance will increase, okay. It will become increase in trade receivable allowance, which means expense is going to increase by 400. Expense is going to increase by 400, so which means my profit is going to get reduced by 400. So now let's calculate the corrected profit accordingly. So the first one, okay, this 350 I'm going to add, and 486 we are going to add 6. Then 1500 we have to decrease. So let's put a bracket around this. And then this difference 250 and 425 decrease, so there will be a decrease overall of 175, and then this has no effect. Then 240 increase, so we have to add 240, and then 400 has to be decreased. So let's add up each column. The first column, okay, also you can add up, and then this also you can add up and write here. So but overall we have to write here 4630 plus 350 plus 486 minus 1500 minus 175 plus 240 minus 400. This is going to give me a value of 3631. So this is the correct